Hi, this is Mani from bsc2nse.com, and in this video I'm going to talk about a EMA breakout strategy. So basically we're just going to use the EMA lines, the candlestick, and then probably the stochastic indicators just as an added indicator. So as you can see here, the EMA lines or the red lines and the green lines, and I've set it to 8 minute and 13 minutes. So, and before we proceed further, this strategy was shared by Shakti, who's registered in the forum bsc2nse.com. So, thanks a lot to her or him. So again, before we proceed with this strategy, you should understand whether the trend of the day is negative or positive. For example, today the overall trend was negative, completely negative. So on a negative day, you should look for opportunities to go short. And if the trend is a kind like completely positive, then you should look for opportunities to go long. And again, if it's a neutral day, then you can look to do both, go short and go long at the respective good opportunities. So as you can see, the 8-minute EMA always stays below the 13-minute EMA, which signifies that the day is entirely negative. It never goes above the green line. So on an extremely positive day, you will see that the 8-minute EMA is always above the 13-minute EMA and never is below that. And on a neutral day, you will see it going up and coming down. So the lines will keep crossing each other. So again, let's define the strategy here. Basically, as you can see that I'm going to define that a particular candlestick here. The candlestick represents 5 minutes, and if the candlestick touches the line and is halfway up or halfway down, then it's not a decisive break. Okay, and if a candle gets formed completely below or completely above these two lines, then I define that as a decisive break, meaning here you can see the large negative candle. The candle before that is a positive breakout, and before that all these candles are touching the line, so they are not decisively breakout candles. And again, after this negative candle, you see that these are all decisive breakout candles, okay, on the negative side, indicating that the trend has turned negative. So after that, it never ever actually breaks out on the positive side. So these are all touching the lines, meaning that this becomes the resistance after it breaks out on the negative side. And only here, so this is 12 p.m., this is 2 p.m. So somewhere after 1 p.m. it breaks out on the positive once. So this is more like a false candle for a false indicator on a day when it is extremely negative. So it gets immediately broken down on the lower side. So again, you have the decisive breakout candle here just before 2 p.m. and then the market again continues on the downside. And pretty much what you can do is once you know that the trend is negative and it has broken down and the candle breaks down decisively on the negative side, you can sell whenever market touches along these lines, because this line acts as a resistance. So as you can see that it just kisses the line or just gets above it, and every time it sees selling from there. So again, on an extremely positive day, or when the news is extremely positive, you should watch out for the positive breakout candles. And after that, once the trend becomes positive, you just have to buy along the support line. Whenever market comes to this line, you should be buying. On a neutral day, again, you can do both, meaning you can once the candle breaks decisively on the downside or upside, you can either go short or go long accordingly. So again, on this day, a positive breakout candle is not an opportunity for you. You should not be looking out for the positive breakout. Instead, you should look for the negative breakouts, meaning here just after 10 a.m. As you can see, just after 10 a.m. the first candle after 10 a.m. is the negative breakout. So after that you can start selling at the whenever it touches the line. So again it breaks positive here, again a fresh negative breakout here. So again you could have gone short after the negative breakout happens along the line or immediately. So you can, so there's effectively a negative breakout here just after 10 a.m. and then one more negative breakout here just before 2 p.m. So you could just go short on these opportunities, and again on an extremely positive day you do the reverse. On a neutral day, when you don't expect the markets to be extremely either positive or negative, when you just expect it to fluctuate back and forth, you can just watch out for both the opportunities. And to couple that, as you can see here at the bottom, the stochastic indicator varies from 0 to 100. So whenever it hits 80 you can probably go short, and whenever it hits 20 you can go long. But again, since this is a day when this is extremely negative, so 80 here you could have gone short at 10 a.m. 80 again, you see at something like just before 11 a.m. here. 80 again just before 2 p.m. or let's say 1:45. So here you could have gone short. So again close to 80 here. So these are all opportunities to buy and sell. Watch my other videos as well. The 1 rupee strategy should also be very interesting. And any questions, any queries, post in this video and I'll try to clarify that. And follow us on facebook.com/bse2nse.com. Subscribe to our YouTube channel so that you get notified of new videos. Thank you.